Hey guys, good morning and welcome to just a little short video that I decided to do here this morning. And what you're looking at basically is a price action chart, Forex. For those who are not aware or have never heard of Forex trading, it's basically the simultaneous trading of one currency pair to another. So, you know, Forex trading is a great business to get into. It's a great hobby also if you want to take it as a hobby because you can do forex trading from anywhere. You know, as long as there's an internet connection, you have the ability to make money in the forex market. But most importantly, you have to be able to understand the market before you're able to trade the market. And one thing I've always said to people is invest in your knowledge, invest in yourself before investing in the market. So often I get people that says, "Oh, I want to learn to trade, you know, because I've lost 10,000, 5,000, 15,000 in the market because I thought it was easy." And they're doing things on the flip. Now, the main thing about forex trading is timing the market, timing the trade with technical analysis. Now, the question in every trader's mind is, or the question that should be in every trader's mind is, just when and where should I pull the trigger? Now, technical analysis provides the tool for answering that question, but there's really no single answer to that question. There's no single technical indicator that can be exclusively relied on to produce a winning outcome because the market is so complex. No one to date has produced a consistently reliable technical trading system for any market, let alone Forex. And this is because technical indicators can never capture all the variables that influence price movements. It's impossible. But what we traders do is we look for probabilities. We have an edge and we look for those probabilities and we trade that edge. So, looking at this chart right now, and yes, you're seeing some labeling here X, A, B, C, D. For some, it might seem confusing, but because I have a deep understanding of the market, and for those who may be watching this and I have a deep understanding of the market, you kind of get what I'm doing here at this point. So, what I'm saying here is what I'm expecting to happen in this scenario is we have this swing point, and then price came down from A to B. Now we're getting a retracement of that AB move into C, which is around here, which is around 78% of this AB move. And from this point, we're expecting the market to do what? Fall. So now this doesn't happen every single time. I'm going to be honest with you. It may not happen right now. Price may just continue going higher. We never know. But if we do this consistently, if we look at patterns, specific price patterns over a period of time, and trade in a series of these patterns over a period of time, believe me, you're going to start seeing success in the market because it's all about consistency. It's all about having that edge that defines your trade executions at any single time. Now, we just got out of a trade on the euro dollar. And what I looked at initially on this trade is this. We see this price coming down to here. Hit that level of support. Market rallied, came back down, hit that level of support again. So that's considered to be a double bottom pattern. Then what happened after that is that price rallied up and broke broke this level of support, sorry, this level of resistance, pull back, and then the market starts to rally. So if you're able to identify patterns like this on a daily basis or weekly basis, don't you think you're going to end up with more winning trades than losing trades? The fact that this happens all the time. Now let's take a look at another currency pair. Look at the New Zealand dollar. Price came down, hit a support level, and you have to understand where support and resistance levels are. Market comes down, hits support, rallies back up, hit supports again, boom, breaks, oops, breaks that level of resistance there, pull back, and then the market starts to rally. Came back down again, hit the same level of support, and then rallied once more. So you see, on two different currency pairs, we saw almost the same pattern. Let's go again. And let's take a look at the Aussie. Okay, on the Aussie, there's really nothing going on the Aussie. All right, let's look at the pound dollar. On the pound dollar, look at it right here. Price came down to a support level. Same pattern. Market rallied, broke resistance, pulled back a slight bit. Right there would have been a good entry price to get in, and then the market started to rally upwards. So, in a nutshell, by understanding how the market works, by being able to identify these patterns before they actually emerge, is going to be essential to how to the success of your trades. So, in a nutshell, guys, invest in knowledge, invest in educating yourself about the market before diving into the market. It looks easy, it really does, but it's really not that simple. But once you have someone to guide you, to walk you through the process, then will things become easier. So, until next time, I will talk to you guys again soon. Take care. Bye bye.